Good Monday morning. I'm Yahoo Finance Executive Editor Brian Sozzi. This is Opening Bid. Big day for Yahoo Finance as we unveil the winner of our 11th annual Company of the Year award. The company getting the award this year and beating our NVIDIA in the process, OpenAI. OpenAI is the first private company to ever win our highest newsroom award. Hat tip to y'all. Here's what OpenAI CFO Sarah Friar told me exclusively on two key fronts. First, what the company currently being in code red exactly means.
Code red is really just saying to the company, the main thing needs to be the main thing. And so if you are working on many things, but you're being told you have to get this done, in particular, a big focus on ChatGPT and how we show up for our users, and it might be consumers all the way through into enterprise users, you need to prioritize that first and foremost.
In other words, in life, focus is good. Second, the financial outlook for OpenAI, which is very critical to the company making good on its many promises to the entire tech ecosystem.
Our compute strategy has to have a multi-year lens to it. So it's about compute we will buy over 5 years, 7 years, even 10 years. So when you hear a lot of these big numbers, think about them as much more spread out over time. And then beyond that, of course, we need to keep building our business model to meet our commitments. But thus far, we are the fastest growing consumer platform the world has ever seen.
All right, let's get to our opening bid roundtable here with some hot takes on our winner, OpenAI. Tom Essay, Sevens Report Research founder, Ivana Delaveska, Spear Invest founder and CIO, alongside Morning Brief and Markets Catalyst anchor, Julie Hyman. Julie, I want to start with you here. You and I go back to with Sarah over at Nextdoor when she was the CEO. But looking forward now, it is amazing just to see, one, of course, how much bigger that business is, but of course to see her at this very pivotal time.
Yeah, this pivotal time when, as you and I talked about earlier, she may be very good at fundraising. We have seen, obviously, OpenAI just rake in fundraising, but they are burning cash at a high rate. So now the next challenge for them is, even as they continue to raise funds, right, either in the private markets or eventually in the public markets, they are also going to need to ramp up that revenue so that they will not be reliant on fundraising alone in order to fund their business. So that's really going to be the test, I think, for OpenAI. Maybe not in 2026. Maybe they can still ride this raising wave for a while yet. But at some point, they're going to need to ramp up the revenue as well in order to help fund everything they're talking about and to help sort of prove that there is a return on investment for these large language models and for what ChatGPT in particular can provide.
Tom, let me get over to you here. How important is OpenAI next year continuing to not only secure the money it needs, but secure that money from investors willing to pay an even higher valuation? How important is that to the AI landscape?
Good morning, Brian. Thank you for having me on. This one word, critical. It's absolutely critical, not just to the tech sector, but to the entire S&P 500. Because if all of a sudden we hear even a whisper about OpenAI having funding challenges with all of the money they have promised and committed to, and all of the stock gains throughout the tech ecosystem that has produced this year, then we are talking about air starting to come out of a very big balloon. And if you combine that with what we're seeing from Gemini, where there is legitimate competition for ChatGPT now, unlike they have seen since they burst onto the scene 3.5 years ago, it's a major, major issue, not just for the tech industry and the tech sector, but for, frankly, every sector in the market.
Ivana, not just, good to see you here. It's not just OpenAI is likely going to have to raise more money next year at a higher valuation. It's Anthropic and many companies out there building models like it. Do you think we have reached peak growth rates for AI companies like this?
Well, that's a great question. I think we still don't know the answer to. I don't think the growth rates are peak anywhere close to being peak. I think we're going to continue to see growth. I think the bigger question, to Julie's point, is whether we're going to be seeing the returns on invested capital. I think that's what investors are really focused on right now, because you see these numbers and user growth, but if that's all funded by capital rather that's not really returning, I think that's going to be something that people are really closely watching. We believe that ultimately the returns will be there, especially as we see this next wave of infrastructure put in place. You're going to be able to start seeing some of these AI agents come at a relatively low cost. I think that's really the key that we're looking out for in the next 12 to 16 months. But we do believe, so we believe we're going to see the returns. The market is not so sure. So that's why we're at this interesting point in time.
Ivana, do you think we are in a bubble, or what we're seeing, whether it's capital raises at higher valuations, growth rates, all that's normal given the enormity of what we're seeing with the pure technology that is AI?
So we don't believe we're in a bubble, and we're basing this off on valuations. So if you see current valuations for companies like NVIDIA, companies like Broadcom, they don't scream particularly high compared to history, especially given the growth rates that these companies are posting, specifically for AI, over 100% growth rates, right? So, and the valuations are within historical ranges. So we don't believe we're in a bubble. We think some companies are over promising, and then some companies are under promising. So that's really where we're focused on, to find the ones that maybe are guiding conservatively and can exceed expectations. I think on that spectrum, OpenAI screens pretty negatively because they are promising some really big numbers, and the question is going to be whether they will be able to deliver on those. Google, on the other hand, they're not promising too much, right? And they do have some interesting technology. So I think you see a spectrum of companies. Some are a little more aggressive and some are a little more conservative.
Julie, what I find so interesting amongst many threads here in this OpenAI story, they're not the only company with a model. Then there's Anthropic, Gemini 3 is having a moment, and at this point, it does seem like OpenAI has fallen a little bit behind.
Well, but then OpenAI then came up with an updated ChatGPT, and so they were seen maybe as catching up here. I think one of the background and overarching questions has got to be that some have posed is this a commodity, or is this something where there is a real technological edge? You know, even if there are small technological differences and advancements between these models, is there a big enough difference for an enterprise to switch its spending from one to the other? Is there enough upside to switch to one? Or do you see a commodification of that whole LLM space, and it's really whatever applications are going to be placed on top of it, the agents, what have you, where the real money is eventually going to be made? As everybody says, it's a cliche at this point, it's early on in the cycle, we don't know yet. We don't know, but there's an awful lot of money being invested in something that we don't know the answer to yet.
Good point, Julie. Tom, I asked Sarah Fryer about if their hardware ambitions. Look, she wasn't going to say, we're coming out with a new device next year in the first quarter. Wasn't going to say that, and I get it. But when they do come out with it, and assuming they do, I mean, do you think they could really make inroads against the iPhone?
No, I don't. I think that this has been tried so many times, and it's just, to Julie's point about whether or not this is commoditized with apps on top of it, it's not the iPhone that's so great. It's the fact that the apps are on top of it and everybody's integrated into it. So you have to break that sort of cycle of dependency that we all are on through the iPhone apps itself. And I think that you can come out with the greatest ChatGPT in the world, but unless you can layer in all the apps that are on top of it to interconnect with every part of our daily lives, that's a really big moat to cross. And I think if that's the way they're going, I personally view that as a potential mistake. Apple is the axe in that space. I don't think anybody can break them. I think the ChatGPT's path to success is to create the best LLM that they possibly can and become sort of the number one in the space and stay the number one in the space.
Tom, what do you like in terms of AI trades into next year? Is it still the tried and true? I mean, are we still staying long, Mag 7?
To a point, but I think we're going to see some pretty massive bifurcation. So I think that's sort of the next evolution of this trade, where there are going to be winners and losers within the Mag 7. If I had to pick one stock that I think is probably my favorite, it's Google, because of Gemini. And I think this is absolutely a code red for OpenAI, because Google has such a dominant position in search. It's very easy for people and enterprise to simply layer on Gemini on top of what they're doing, as opposed to going to a new ChatGPT or something like that. And so I think that Google looks very attractive. I think companies like Oracle that are not overextended financially, but are sort of raising eyebrows with a lot of the spending that is tied to OpenAI. I think that companies like that could struggle. So for me, it's not all the Mag 7 is going to do well. There's going to be some pretty serious bifurcation. We've seen it in the last, say, 2 months of 2025. I think that gets worse in 2026.
Ivana, going through this process, the two finalists for this award were NVIDIA and, of course, OpenAI, which has won the award. But throughout the process, Ivana, we never really even mentioned Meta. I mean, how much of an AI play do you view Meta at this point?
Well, Meta is a real AI play on the application side, but we haven't really seen them showing benefits from this new wave of investments, right? So that's really going to be the key to watch going into next year, whether they're going to be able to leverage this next wave of investments into returns on invested capital. So we saw them being able to do that with the first generation of GPUs, right? When they were facing a lot of competition from TikTok and they started implementing AI and they were really able to improve their algorithms significantly. Now the next wave is going to be whether they're able to introduce marketing AI agents that can help you manage your marketing exposure effectively. And I think that's coming. It's just going to be a question on when, right? So we're trying to look for early signs of that being effective and offered at a low cost.
Julie, over to you.
Yeah, I just wanted to mention 2 points here. First of all, if you look at the recent sell-off that we saw in stocks, and then the recovery has not been led by tech. It's been led by consumer discretionary and financials and industrial. So the broadening that we, have been talking about for a long time, it's starting to happen a little bit. It might be short-lived, but it is happening. And point 2, and this is something that investors have been bringing up with us as well, is that the AI trade is not going to be limited to AI or even tech companies at all, right? Investors are increasingly going to be looking to companies across industries, how they're leveraging AI in ways that we can't even predict yet in order to improve their businesses. And so that's something I think we're going to start to see and really start to look for next year when that starts to materialize. And that's going to be drawing some investing dollars as well.
No, good point, Julia. Yvonne, let me get back to you real quick. Do you view NVIDIA, Tom bullish on Google Alphabet, is NVIDIA still the most purest way to play the AI trade?
Well, it's certainly the purest way to play the AI trade, but you're not getting broad exposure, right? So it's really focused on the hardware side. So if you're looking to play more of the application layer, I think then Google would be a better way to get access to that. I think where we stand is we're looking, to Julie's point, for broader implications of the AI trade and trying to find opportunities that maybe are not on people's radars. So one example is the space economy. I think that's going to be really impacted here if we can actually get these data centers operating in space. Other examples are cybersecurity. So I think from where we stand, NVIDIA is a really good way to play the hardware side, but they don't give you a broad exposure to AI anymore.
Tom, over to you. This has been another good year for the tech space, even outside the Mag 7. I mean, there's been some challenges, but by and large, another good year for the tech sector broadly versus other sectors. Now, we just got a rate cut. We may get 1 or 2 more this cycle. What does that mean for tech stocks next year?
It is still positive, right? I mean, it's not considered a cyclical sector, but certainly it benefits from generally solid economic growth. I think the issue you run into is valuations, right? As you look around the space, AI enthusiasm, as we call it, has really propelled the entire tech sector higher. Now, if we go into a state of 2026 where there's bifurcation, where there are winners and losers from AI, which we haven't seen before, then does all of a sudden that valuation come down for the sector a little bit. So I don't see it as sort of an imminent crash looming unless there's some sort of major AI issue. But I do think that the tech sector we're not going to see this racing away outperformance that we've been so used to for the last couple of years. And again, I think that some people think it's either, tech can continue to lead the market, or we're going to see a bubble burst. There's also a middle ground where tech performs maybe generally in line, maybe a little bit worse than some of the other sectors, as long as economic growth stays solid.
Julie, last word to you. I was reflecting a lot, when I was studying the bubble from 1999 to 2000, that tech bubble. I just don't think this moment is similar. I know why people want to draw the comparisons, but thinking back to your experience, I mean, do you think there's similarities or these are 2 different periods?
No, I think there are absolute similarities in the sense that you have a technological innovation that is seen as world changing, but in ways that we don't quite comprehend yet. That's similarity one. The other similarity that we are not quite sure is a perfect parallel, is just a, does history repeat or does it rhyme kind of situation, is whether the builders of the infrastructure will retain their value. In the dot-com bubble, they did not. The builders of fiber, for example, did not retain their value in a significant way. In other cases, it took them years to gain their value back. So that's still kind of an open question at this point. And something else that a lot of investors have talked about in a way that this is different is that it is compressed. It's happening in a shorter period of time in terms of the build out. So I guess we'll get the answer to our question hopefully sooner rather than later.
I'm sure we will. All right, big thank you to the opening bid roundtable. Really appreciate it on this really important day here with this award winner. All right, with OpenAI winning Yahoo Finance's Company of the Year award, one can't help but wonder, what inning are we in for the AI bubble? My next guest says it's early, and if you escape the bubble, you risk missing out on more big gains. We'll be right back. OpenAI has been selected as Yahoo Finance's Company of the Year. The selection raises an important question for investors. Is the AI bubble just beginning, or is it about to explode in everyone's face? Here's what OpenAI CFO Sarah Friar told Yahoo Finance in an exclusive interview.
What I think is the most important thing for investors is a belief in a strong, sustainable business that's unlike anything that they have experienced before, and that there is a path to profitability over time.
Adrian Cox is a managing director and thematic strategist at Deutsche Bank. He joins me for my Power Player segment after putting out some great research looking right into the heart of the AI bubble. Adrian, really enjoyed your work. Thank you for doing this here this morning. You made a lot of great points. Let me start with this, though. Are we in the early stages of a bubble, and how do you explain that to the average investor?
It's tricky. I'm kind of reminded of Franklin Roosevelt's statement about the only thing we have to fear is fear itself. And in this case, I think it's almost the reverse, which is that the only thing we have to fear is a lack of fear itself, because that would be a complacency that I think at the moment we don't really have, because there is so much discussion about whether there is a bubble or not. But when I began to really look at it, I discovered that there's not just one bubble, and that I think a lot of the discussion gets muddied because there's so much confusion between at least three potential kind of bubbles. So on the one hand, there is the valuation bubble, which is the sort of obvious things about whether valuations are historically elevated, whether they're justified by comparison with other stocks and by comparison with the kind of earnings you're getting. But then secondly, there is the investment bubble, which is looking at whether all of the investment in data centers and so on is justified. And then there's a third kind of bubble, which is about the technology and whether the technology really is, number one, going to advance, and number two, going to deliver the kind of real changes to the economy that we're expecting.
Adrian, let's start on the valuation bubble, because there's been reports that if OpenAI were to go public next year, it might be valued at $1 trillion. There's no clear indication that they might be profitable before 2030. I mean, does that concern you?
Yeah. If you have there is obviously a long history of companies which take many years to become profitable, and when they finally do, then they are very successful. And you only need to think of Amazon or Tesla as sort of poster children for that kind of outcome. But having said that, in the case of OpenAI, at the moment it is still very early innings, and we're looking at a company that has shown recently a kind of slowdown in the growth in subscriptions, which are really the backbone of its economic model. We've seen a rise in the number of substitutes out there, particularly in the form of Google's Gemini models, as well as open source models, which are essentially free and therefore able to be used by enterprises to do their AI work without the kind of costs that an OpenAI subscription or kind of tie-up would cost. And then also there's a kind of an ongoing debate with OpenAI about its increasing costs. So It has signed these deals supposedly to have about $1.4 trillion in investments in data centers, but that is many, many times the sort of $13 billion or so that it's expected to generate in revenue this year. And it's not really clear how it gets to the path to be able to afford all of that.
Are the businesses during this cycle better than we saw during the tech IPO boom of 1999, or the tech craze? And I look at OpenAI and Anthropic, I compare it to something like Pets.com. I mean, yeah, they were selling stuff, but can you make the case that this crop of businesses today, even though they're not making money, they are better fundamentally than the businesses that were losing money that went bust in 1999 and 2000?
Yes, I would make a distinction between different kinds of businesses. So on the one hand, back in 1999, there were two different bubbles really going on at the same time. So on the one hand, you had the telecoms bubble, which was heavily indebted telecoms companies laying miles and miles of fiber optic cable that then lay dormant for, in some cases, decades. And then on the other hand, there were the dot-com bubble companies, which were very thinly profitable, or in many cases not profitable at all, lightly capitalized, and generally there was a whole host of IPOs that people bought into, and then those companies blew up pretty quickly. Now, in this case, it's a little bit different because you don't really have at the moment this huge IPO market being dominated by mom and pop investors. So instead, on the one hand, you have the big hyperscalers, which are already generating real returns from their AI investments, both in terms of customers paying for the data center usage, for the cloud usage, but also in terms of them improving their own operations and cutting their costs. So that's the hyperscalers on the one hand. And then you have a relatively small, still at this stage, set of model makers in particular, so OpenAI and Anthropic, which are, as you say, unprofitable, but they don't define the entire AI bubble as it stands at the moment. So again, the devil is somewhat in the detail in teasing out these different kind of bubbles and deciding, yes, on the one hand, you may feel comfortable with investing in Google, which has a strong search business, for example, and a very strong cloud business. And that is a kind of an AI play where there's a certain amount of knowledge that goes into how well it is going to do, or NVIDIA even, where it's selling chips, whether you think that the numbers are inflated for a few years out. It's currently selling a lot of chips. But then on the other hand, there are these other companies, OpenAI with an unproven business model, Anthropic with perhaps smaller ambitions, but a much tighter business model in the sense that most of its clients are now turning out to be corporate clients who are actually paying for the service more than the customers who are using OpenAI for free.
Really good research. Adrian, thank you so much. Happy holidays. Look forward to staying in touch.
Happy holidays. Great to speak, Brian.
Likewise. Coming up, we'll continue our Company of the Year coverage on this year's winner, OpenAI. Julie Hyman will be right back with more on Market Catalyst.